Welcome everybody. This is the Thursday evening Viper Trading webinar. We are here to look at trading futures instruments using Viper tools. And today is Thursday, April 4th, 2019. It's a day before my wife's birthday, so I better remember that one, right? Anyway, let's get our standard disclaimer out of the way, and we can get on to some charts, start looking at some trades, which, of course, is why everybody's here. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And, of course, everyone in here does know that you absolutely do trade at your own sole discretion. All right, with that out of the way, let's get over and go on here to screen one. Here we go. We took a poll in the pre-webinar session as to what the team would like to see analyzed here tonight in the webinar. By far, crude and ES were at the top of the list. Russell had a couple of voters, and gold was a far laggard way behind. So we're going to start with crude. Now, if you are new to Viper, or you are on a free trial, or you are here on a visit this week, let me explain what you're looking at. I'm just going to take like 2 minutes and explain, because some of you might be completely new to what you're looking at here. So this is crude oil. We trade futures markets here. We trade intraday volatility. We're looking for pushes in a trend, either up or down, and we trade the retracements. Now, we're connected to our data feed with our broker, NinjaTrader, and we trade exclusively 4 range charts. Okay, 4 range. So it means they're 4 ticks per bar. We don't trade time-based bars. We have them for years. Trust me, a range bar, or even a Renko for that matter, is much better than a time-based bar. So what you're looking at here is indicators. If we just had a chart up here with crude oil connected to a data feed, you would just simply see bars going up and down, up and down, up and down all over the place. It would be extremely difficult to see where to take a trade. And so for that reason, we have created background colors, which you see here, green, red, and these kind of opaque colors here. Bar colors, blue, yellow, and red. Predictors, real-time swings. It's these big oval real-time swing levels. Power meters are the 4 trends on the chart at any given time. Green, of course, is up, red is down. And so, when all 4 are in sync, that's usually a pretty powerful trend. Sometimes in a retracement, 2 or 3 might be green, and the other one red if you're having a short-term pullback. And then, of course, the most prominent thing on here is the bands. We have this notion of what's called the mid band, the thick band in the middle. It's called the middle band or the mid band. And of course, we have 1, 2, 3, 4 bars below it. Bands below it. 1, 2, 3, 4 bands above it. And the thin red line, of course, as you know, is at the top of band 2. So the thin red line here is referred to as line 2. And then, of course, up here at band 6, the top of band 6 is this thin green line, which is called line 6. Now, here again, if you're on a free trial or you're visiting or you're new, don't worry. You don't have to learn all of this in the next hour, half an hour, whatever. We have hundreds of hours of training in the membership area where you can get access to it, learn all the terminology. If you are visiting or on a free trial, you can access free webinars right here. Let me show you real quick where those are. You'll navigate to our website, vipertradingsystems.com/webinars from the toolbar link. And I think there's about a dozen on there. And Gary keeps these pretty current. So 1, 2, 3, 1, 2, 3, 4. I think there's like 14 on here. And so, if you want to learn some of the terminology, if you're coming in the live room and you're not really sort of up to speed on what we're doing here, just watch a few of these and it'll really help a lot. We do, Jai. Jai, here, let's do this. Jai, I don't know if Gary, I don't think Gary's there. It's after 7 o'clock there. He's probably not there. Do me a favor. Can you ping Gary in our main office on that question? Here's how you reach him. Go to vipertradingsystems.com, and that's true for anybody with questions that he's asking about various costs or discounts to trade with One-Up Trader. And the contact tab is buttons right here. You can call him or you can Skype him. Skype is Viper Trader, one word, and there's the phone number directly to his office. Okay? He can talk to you about the discounts and what have you we have over there. Okay, so let's review some trade setups. And then today, one of the topics we wanted to cover, because this is very timely, and I want a quick show of hands here. You'll get a hold of Gary. Okay, Jai, good deal. Quick show of hands. How many of you experienced losses or drawdowns on your trades? How many of you feel like every time you get into a trade, the market just pulls right back against you? It's like they know you're getting in. There's some kind of, trigger somewhere that goes off. Ah, they're in. He's in. She's in. Time to pull back against them. They took a position. And you get stopped out, and you feel pain and another anguish. And you're like, oh, my goodness, this is not for me. I'm tired of dealing with this. Oh, every time I get in, pulls right against me, and I get power slammed. Okay. I see a lot of you saying that's me. Yes, that's me. And interesting, Jai says, it happens to me because I do not follow the system. And that, you know what? I'm amazed he said that. Because I was going to ask that question. What is the reason, the primary reason that you think that you're feeling all this anguish and pain when the market pulls against you? What is it? What's the reason? How can we address this drawdown issue? What do you think it is? Why are you feeling that pain? Fear of loss, that's it. They hold losers too long. Yes, Mario, that's a good one. Stick to the system and have some patience. Good. Need more venom for the snake. Bad money management and trading too large for your account. Yes, that's a good one. Lack of discipline. Roger says, I move my stop up way too quick and then I get stopped out and miss the trade. That happens. Been fooled too many times. Late entry. There's a good one. All right. You guys and gals in here, you're getting pretty good. All those are fantastic answers. So let's talk about the number one thing. If you want to correct that, if we want to correct this whole pain and angst in getting into trades and then pulling against you, and you're feeling heat, you're feeling pain, and then you wind up stopping out a lot of time on those times on those trades, and then like I keep saying it's going to turn back, and it never does. There you go. Those are called hope trades. Yeah, those are called hope trades. Let's address Roger's issue and some of your issues here. So one of the main focuses that I would suggest to focus as much time in the short term as you can to address the whole drawdown issue is you have to, and I know this is going to sound kind of obvious, but don't shoot me after I write it, okay? You have to wait patiently. Patiently. Yeah, there you go. For the proper entry. Just put it this way, trade entry. Okay? Wait patiently for the proper trade entry. How many of you here tonight think that if you did this one simple thing and worked solely on your entries, that would address some or all or most of your drawdown issues. If you could just do this one thing right here. Nail the entry every single time. Every single time you take a proper entry. You're not in too early. You're not in too late. But you're right there at the right time, at the right spot for the right instrument. Would you, everybody in here and listening on the recording, would you not agree that doing this one simple thing would probably eliminate, I'd say fully 75, 80, maybe as high as 90% of your drawdown issues? Now, and most of you, of course, are saying yes, because I know that is it. You know, I know what it is. You're getting in too early. You're getting in too late. Now, let's focus in on addressing those topics. We don't normally talk about them in webinars, but they're extremely important, and we're going to address both of them tonight. So we have this notion of getting in too early, right? This is into trades, either long or short. And I know why you're doing it. We're going to talk about it in a minute. And getting in too late. Two trades. Too late. Oops. Some typos in here. There we go. Let's go back and put the early on the early here. In fact, what I'd like to do here right now is, Robert making a comment that ES has been very tough to trade lately. Yeah, you know, ES has been very range bound. You know, I have to tell you, I've traded ES off and on for years and years and years, and there are periods in its volatility where, you know, it is mind-numbingly range bound can be for hours. Literally hours. I know Gary sat in a trade long for like 2 hours before it finally broke out and ran. You know, when it's doing that, you just have to, you got to do one of two things. Either if you're not patient enough to wait for it to break and run, and you just don't want to sit there and tie up all your time with it, then you have to dump the trade. Okay, and go find something else that's moving, right? You know, if you do have the patience to deal with that, you can wait. And a lot of times it will eventually, like at the open or news or whatever, it'll break and run. It'll break and it'll run up and run down. You'll get some movement out of it. But, you know, you're going to have to deal with some chop to get through that. And I don't mean bad chop. I mean range-bound activity. And we'll look at that today. Now, I want to address the second one first. Getting into a trade too late. So here's what's happening. Okay, let me do a couple examples and let me see if this describes what you collectively in here tonight might be going through. All right, let's just look at a couple examples and we're going to do them together. Okay, we're going to do them together, and then we're going to do some where I put it in front of you and you don't know what's going to happen. Okay, so let's do this. Show of hands, how many of you are mid-band traders? Anybody? Out of all the trades we teach, there's like 3 or 4 or more different types of trades that we teach. Minimum criteria, deep retracement, phantom, mid-band. How many of you like mid-band trades? Mid-band trades. Almost everybody. Good. Because you know what? Most of you know, of course, that's my go-to trade. Unless you're in a range, a very tight range, and the band is in the middle of it, then that's not a good trade, obviously, right? Right. Okay. So let's look at this scenario here. The market has broken down through support. You have red bars. You have a red stealth. The background has turned red. And so now we are looking at taking shorts. Right? We are looking to take shorts. So as I look at this chart, And I start to think to myself, where might a short set up? What would you say if I asked you that question? And the market is sitting down here. Okay, the market's sitting right down here. Here's where it's at when I'm asking you the question. 62.30. Just put that swing in right there. And I was to say to you, if you want to short this market, where might you do it? Now, this requires you to think beyond the right edge of the chart because it hasn't gone to where you're thinking about yet because it's sitting down here. But we need to anticipate to participate. So if we were going to look to enter short, where might the market go to give us an opportunity to take the short? 62.53, 62.44, mid-band area. Wait for at least the minimum criteria or mid-band for a kiss and roll to get short. Good. So what all of you are saying, especially those who raised your hand and said, I am a mid-band trader, I love those trades, I'm going to put a little target box on here so that you can visualize where the trade might occur. And I'm going to do it like such. All right? Okay, so the market's down here, and we're thinking ahead. We're anticipating what we want to do. The trend looks like it has shifted from up to down, and we are looking for a retracement short. Now, I'm going to slowly move the bars forward, and when you think it's time to either draw a region box around it or put an upward sloping trend line on it to get in short, or a limit order market, however you want to get in, you type in an S when you see that opportunity present itself to take the short. Are you ready? 6:30. I don't know what day this was. This today? Today's the 4th, right? Yeah, today's the 4th. Okay, so this is this morning, 6:34 on crude oil. Here we go. Moving the chart. $6.41. Remember, when you think it's time to short it, you're going to type in an S, okay? Here we go. 6:41. 6:48. So crude pits have been open for 48 minutes, and the equity markets in the U.S. have been open for 18 minutes. Okay, you're coming up on 6:50, 6:55, 6:56. All right. Now we got a whole ton of people in here tonight, and welcome you late birds. Don't worry, this is being recorded. If you came in late, it's perfectly okay. We're going to send this recording to everybody, okay? So don't worry about it. You'll get to see it either on the web or, connected to your email or in the subscriber area. Before this market started to retrace from the swing at 62.30, I drew a box right here. And we explicitly said that if the bars on this retracement come anywhere into this box, that represents a shorting opportunity. Did we not say that ahead of time, ahead of this exercise? Okay? All right, let's see. We got, out of all the people here, 1, 2, 3, 4, 5, 6, 7, 8, 9, like 9 people out of the entire audience tonight. I won't say how many people are in here, but it's a lot. So I don't know, some of you might be busy doing other things or not, really sort of paying attention, or maybe you don't understand, which is totally cool. But I have to ask you again, I'm going to do this exercise one more time now that you know what happened. At what point did the bars go into anywhere in this box? Here's the exercise we just did. Now I'm going to stop it right there. And I'm going to ask you a question. Now you might say to yourself, man, Charles, you are really, really doing a deep dive on this whole thing here. Why do you think I'm doing that? Are these bars gone into the region, yes or no? Have those bars gone into the region, yes or no? Yes. Okay, good. Okay, let me advance it a little bit more. We're recreating this morning at 6:50 a.m. Have these bars here gone into the region that represents the shorting opportunity, yes or no? Those bars right there. Okay. Well, then that's why I'm kind of perplexed a little bit on why only 9 of you out of the entire audience here tonight typed in an S when you clearly saw that these bars had gone into the opportunity zone right here. Now, let me explain something to you, and don't misunderstand what I'm saying, and I'm not being rude at all. That's why you're having losses. Right? That is why you are feeling drawdown and experiencing losses, because you are not seeing the proper entry point to get in. What's that, Vernon? Okay, when it is rolled? Okay, let's go bar by bar. Let's do this, because a lot of people might not understand this, and it's a good question, Vernon. Let's not discount anybody's questions. And this, I'm speaking directly to the late entry issue. Has this bar rolled over, yes or no? Has that bar right there rolled over, yes or no? What direction did it close? Is a bar that does this rolling over? Because when you hear a trade call in the room, if the market, and let's use an example. Okay, and the market's down here at 62.30, and somebody sitting in the room says, it would be either Gary or me, would say, you know, I'll tell you what, if crude retraces anywhere up there around the mid-band, around that 53 area, and rolls over, I would look to be taking a short. Now, looking at this again, has this bar rolled over from one tick beneath the mid-band? Yes or no? Here, let's get real clear about this. We're going to really, really analyze this real good so there's no confusion about what we're doing. Did this bar close up or down? This one right here. Not this one. This one. I can't do it. It's going to put it right on it. Right. It closed down. It has like a doji, and it kissed. The wick of this candle kissed within one tick of the midband. Did we not say, by definition, inside in this region box that we do, all of you that raised your hands and said, I love some midband trades. This is the only more of this that could be a midband trade if that bar sat right here on the midband itself. Excuse me. Now, could you have entered on that bar? Yes. How about this bar right here? How about this one? Is this considering a rolling over bar? Or yes or not? Did it close up or down? It closed down. All right, let's keep going. How about this bar right here? Did this bar close up or down? This one right here. No, it's not cooperating with me. It's giving me all kinds of headaches. Up. Good. How about this one over here? This one. Which way did that one close? Does this check the same exact swing that this one checked? Yes. Could you, if you missed this entry or this entry, could you have gotten in on that bar right there? Yes or no? Of course. Yes. That was a second chance. So in that second shot, kissed 52 again perfectly. Perfectly. Now, let me show you some entry points here and show you how to deal with this, okay? If you had gotten in on the close of this bar, let's suppose that you had a region box and you did a bar close, or you had a limit order here, or you saw it rolling over and you hit market. However you got in on the close of that bar, your fill would be somewhere right around 48. Same with this one right here. Excuse me, plus or minus a tick. Plus or minus a tick in here somewhere, right? Now, if you did not enter on those two bars, on a bar rollover, kiss against resistance, and you filled on these bars, you would have quite possibly been filled on this bar on the close of it, or quite possibly this bar right here. Now, on this fill short and this fill short, did you feel any heat? This fill short and this fill short, did those two trade entries short feel any heat? Everybody knows what feel heat means, right? Anybody not know what feel heat means? Yes, both of them did. This one felt obviously more heat than the other one. Now, question. As you're feeling heat on this one right here at 44, and it comes all the way back to 52, fully at least maybe 8 ticks against you, where would your protective stop be? Up here? If you go up 12 ticks, see 12, 56, would you go way up here somewhere? Would you put it way up, like 20 ticks, 15, 20 ticks, way up, 60 something up here, top of this bar way over there? Is that your initial stop on this entry right here? Where are you going to put it? If you had Object Trader, of course, and you used the region box, it would automatically put it for you. But let's say hypothetically you didn't, and you're putting your own stops in. Yeah, now I wouldn't go directly above here. Okay, I would not go a tick above here. I would at least fade the mid band by at least like a tick or two. So you're looking at like 54. Okay, all right, and you got in at 44, so you're looking at somewhere around 9 to 10 ticks. All right, and it fully ate up on that pullback, 8 of them, 80 or 10 ticks. So that's feeling heat. Now on this one, it's quite considerably less. Your risk on this trade is a lot less too, because you're only going from 48 to 54. The risk on this trade is only 6 ticks if it stopped you out. How much heat did you feel? Well, it came all the way to 52, so from 48 to, you only felt 4 ticks of heat. One lot, $40, right? Whereas this trader here on one lot was down $80. Now, show of hands, and be honest, there's no judgment. This is a no judgment zone. No judgment webinar, okay? We're all honest with each other around here. If you got filled on this lower bar and the market started moving against you by 8 ticks and you have one lot and you're down about $80 and it's chopping around in here, how many of you get so nervous you just dump the trade? There they go again, market makers. They know when I'm in. They know I get short on that bar. Look at them running up again and check that swing. Darn it! I better get out. I better get out. This always happens to me. Why me? Does everybody else have this problem? You got to have set rules, David. Let me ask everybody a question. If this market, for some reason, did exactly what you see here, came up and you got in on here or here or here, And your protected stop is up here, so you're going to lose either, what is it, 4 ticks or 6 ticks or 8 ticks or 9, 10 ticks. And, some industrial oil plant blows up and they spike the thing way up and takes your stop out. Can you take a hit of 4 to 10 ticks on a one lot? That's a serious question. Can everybody in here take a hit of 4 to 9 or 10 ticks on a one lot on oil, which you're talking about $40 to like $90? Okay? If just for some freak reason the thing comes up, takes boom right through your stop, and it just stops you right out. But so that's what we're talking about here. So I want to be clear with everybody. That is the way you have to look at it when you get in. How much do I stand to lose on this trade if for some unforeseen reason, the market just goes crazy, it moves against me, and it stops me out? Can I afford to take that pop? Now, if the answer is no, well, then you shouldn't take that trade. If the answer is yes, I can afford to take that hit, then you have to put your stop in and leave it there. You have to respect your stops. You have to not move your stops. Don't pull, starts coming up against you. You're like, oh, a couple more ticks, and then a 6 tick loser turns into a 25 tick loser. Instead of $60, now you lose $200. Those are called hope trades. You never, ever, ever want to get into a hope trade. When you set your initial stop and you believe that's where you want it, above this swing in the mid-band, you have to leave it there. Does everybody pinky swear on that? You have to leave it there. You cannot keep moving it around everywhere. Okay, that's dangerous. And once you enter a trade on one of these bars, you have to be fully prepared, understanding that your initial stop is here to, in the event this happens, take the hit. Don't dump it while it's moving around in here. Don't move the stop. Get all nervous. It's pulling against me. Blah, 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 blah. You have to this is the way the rules work. And if you respect the rules and get really good at them, you will make money. You will have more consistency by respecting your stops and getting in the trade at the proper entry. Now, some of you typed in S when the market was down here, when these bars formed. When these bars were forming, I saw a bunch of S's come in. And I have to be clear about something. That is late bird entry. This oval is absolutamente not the trade entry. I want to make that crystal clear for everybody. If you are not getting entry, if you, when this thing was down here, typed in, yes, I want to take a short at the midband, and the bars came up here and hit a tick under the midband and rolled over for 1, 2, 3, arguably 4 trade entries here, 4 of them, and you missed it, and you're sitting down here at line 2, where these traders are taking scalp profits, you are getting in. And this is a total no-no. This is not the proper trade entry. Down here. You have to break that habit. This is really important, what I'm telling you. If you're getting in down here and the trade's set up here and it pulls way against you and you're getting massive stop outs, you've got to break this problem. You got to break this habit. You've got to be able to train yourself to see the proper trade entry, which is up here at the midband. I know I'm speaking to some of you. I know I am. And it's perfectly okay. I'm trying to help you. I'm trying to share something with you on why this is happening to you. It's because you're not seeing it at the right spot. Now, let's see what this trade turned into. This is a massive trade. I think Gary and I took this trade. Didn't we take this trade? I think we did. I can't remember. I had a handful of trades. I don't remember what they all were. I think I did. I know Gary did. Yeah, that was a heck of a trade. So if you'd stuck with a little bit of heat, Let's see how much money the trade made you. Let's say hypothetically you stopped out down here somewhere. And let's just do one lot. Okay, let's say one you took one lot down to here. And let's do one of the medium fills. Let's not do the highest fill. Let's do this fill right here. Let's say you got filled, I don't know, 45. That's a good round number. 45. Okay? And you rolled it down, you roll it down, you roll it down, and you get out at, I don't know, use a round number, 62. 35 ticks. No, more than that. What did I say this entry was? 45. And you get out at 62. So 45 ticks. On one lot, how much would this trade be worth? Remember, crude is $10 a tick. 45 ticks, crude oil, one short trade. How much money did you make? $450. 4.5 bones. That's right. Okay, well, Robert, yeah, if you're using 3 or 4 contracts on this, you would just, everything that we just showed would be multiplied by 3 or 4, right? So, you put 3 lot on there, 3 times that's what, 1350. 4 lot would be 1750. But now your heat goes up too, right? Even this trade entry here felt a little bit of heat when you pull back to 48. So 45, 3 ticks of heat. This little pullback right here, 3 ticks of heat. Hypothetically, if you put a 4 lot on here and pulled 8 ticks against you, 4 lot, you're down 320. Full pop here, 10 ticks on a 4 lot's $400. So you're risking 400 to make 1750. It's all relative, right? If you're going to short a 1 lot and you say I can take a pop at $60 and $90, and I'm willing to make 450, that's a huge risk return relationship. Yes, wouldn't you agree? Let's call a round number. Okay, I'm gonna risk 10 ticks, right? If I get stopped out, I'll take a $100 pop, and if I catch a runner, I can make 4.5 times that amount. So these are the kind of trades you're looking for right here. And crude oil's been really good. I mean, it's been on a tear. Crude's a good market to learn to trade right now. It's one of the movers. Yeah, well, I'm trying to show you here what that is. Let's do another one. I like crude. Crude has a lot of movement. Let's continue on with crude real quick here. Let's see if I can find a long trade example. You can be as choosy about these trades as you want to be. Okay? Just because we call a minimum criteria trade does not mean you have to take it. All right? Just everybody wants to, let's all get on the same page here. Okay, you ready for a long example? Okay, here we go. I'm going to help you out on this one too. After we do these 2 exercises, the next one we're going to do, I'm not going to give you all the, I'm not going to tee it up for you and let you knock it out of the park. You're going to have to work for the next few. But let's do another one example on the long side. Okay, we're at 8:27 today, and crude oil looked like this. We closed the room a little bit early. I think it was like just before 8. So the room was closed somewhere in here. Obviously, you can see that crude oil had gone into a protracted uptrend move with this thrust. Background turns green. Mid-band and all the all the surrounding bands, they're stepping up. You pull back, come up, pull back, and now we're right here at 8:27. Now, where do you want to get in this trade? Trade is long. Where might it come to give you an opportunity to enter a long trade? You can type in a number. You can type in, anything you want. That's what our exercise is going to be. We're trying to look ahead of time. Mid-band area, 42.39, 42.37. Okay, good. So I'm going to go ahead and draw just like on the short side exercise, I'm going to draw. I want everybody to participate in this, okay? If you are serious about learning how to trade and make money, to the extent that you participate in these webinars, it's going to be much better for you because it's muscle memory. There's going to be some retention in your mind on what you saw and what you know to do. All right, everybody has pretty much called this area right in here for potential trade entry. Now, does everybody understand the exercise we're doing ahead of time? Anticipate to participate. The market, as I'm showing it at 827, 828 this morning, was actually sitting up here. The market's not here. The market's up here. So the reason we are talking about this area is because we're waiting for what to happen. We know we don't get in here. This is the thrust. We wait for a retracement. Good. Now, I'm going to advance the chart. And when you think the long trade is ready to enter, you simply type in an L. That's all you got to do. Here we go. Take this arrow off. All right, advancing the chart. 829. Coming up on 830. 830. Coming up on 831. Going to continue to advance the chart. And here we go. Moving it along. There's 831. There's 833. Get the big bars a little bit bigger for you there. 832. 833. 835. 837. All right. Now, that was huge participation. A huge chunk of you, probably more than half, typed in L when these bars started to form right here. And that is correct. We are looking to take a long trade from support on a bounce. Now, let's do this exercise again so we're all clear on what's going on here. I'm going to make these bars super huge, okay? All right, check this out. Now, has this bar right here bounced? This one. Yes or no? Okay. Has this bar bounced? Yes or no? Has this bar right here bounced? Or how about this one? Which one of these four bars are the bouncers? The two on the left or the two on the right? Two on the right. Good. Now, just like our short example, which bar do you want to enter on? Most of you said that you wanted to get in. You called out numbers like 62.39. I go back up and look. What was the numbers everybody called out here? You had some good numbers in there. Everybody's putting in totally good numbers in here for where to get in long when it was way up there at 62.65. 37, 35 to 40, 37, 39s. Okay, So you can, I'm going to show you right here. Okay, where did it come to? It came right to here. And bounced. Market order, limit order, region box, right? Bar close up, long only, right? Trend is up, bar close only. If you did bar close or you had a region box using Object Trader at the mid-band, you would have been filled long on this bar right here. If you'd drawn a region box and engulfed as I have it shown, you would be filled long on this bar right here. Both of them closing up, considering to be long entry bounce bars. Now, that being said, of course, the entry on the second bar did feel a little bit of heat on the subsequent two bars that pull back right here. There was a small handful of you, and it wasn't very many. I want to say it was only like 2 that typed in the letter L, signifying to get long. Excuse me. When these bars formed right here. Now looking back on it, was that proper trade entry? This oval right here. This oval right here. Is this oval proper trade entry, yes or no? Right here. I'm going to write something in here, and you know what it's going to be, right? It's a big negatory. Is everybody clear about that? I don't want to, I'm not, like I said, I'm not trying to insult anybody or be rude or anything, or I'm not trying to, I have to state the facts. I have to explain, if you're getting in late, this is the reason why. For some reason, and I know, it's different reasons for different people, and I understand that. When the bars are bouncing down here, either you're just not seeing it, or you weren't paying attention, or you just maybe don't understand the concept of where we really need to get in, or it could be any number of things. But you have to understand, if you see bars are up here, and it's already bounced from down here, you can't pull the trigger up here. That's not the right entry. Now, in some cases, let's advance this. Did that trade work out? Yeah, sure, it made money. Both they made money. Yeah, they made money. But you got lucky. How many times do you get in late like this and the thing flips and tanks on you and you get a full stop out? How often does that happen? Robert says, couple of your putting some feedback in here. Yeah, I stare at it long enough, and I look at too much stuff to wait too long to get in, and I'll end up getting in too late. Now you're hitting on a perfect thing, and I periodically say this, and I need to say it more. Excuse me. Let me take a sip of tea, and I'll say this real quick. Hold on. Hey, at least my cough's doing better, huh? My cold's going away and clearing up a little bit. I wound up going with Dayquil. I tried that Asian remedy, and it helped for a little while, but then it came back, so I had to go with Dayquil. Dayquil and a neti pot. I don't know if anybody knows what those are, but they're fantastic. If you can get your hands on one and you have a congestion, those are the way to go. Yeah, no, this later entry here did take heat, Kathy. This one right here did take heat. Not a lot. If you got filled on the close outside the box here, if you got here, it's at 43. By the time you get up here at 56, you're 13 ticks to the good. You're actually taking scalp coin off the table right here. This entry right here. Scalp coin off the table right there. Yeah. And, this guy was upside down. This trader right here was upside down by not much. A couple of ticks in here on that pullback, and it took off, and that one made money too. All right, now let's look at a different type of entry. And let's do a pop quiz before we have to wrap. How many of you know what minimum criteria trades are on the long side? You don't have to explain it. I mean, you don't have to type in what it is. It just do you understand what a minimum criteria on the long side is? If you do, just simply type in a Y or yes. And if you don't, you don't have to respond, or you can just say N or no. All right, good. A lot of you. Good. Some of you know. Okay, all right, cool. Now we're going to do a quick exercise. How many minimum criteria long trades are on this chart? You got 5 seconds. Just type in a number. Boop. 9, 10, 20, 30, whatever. 4 seconds. How many long minimum criteria trades are on this chart? 3 seconds. Just hit your computer. Boop. 15. Baker's dozen. 2 seconds. Counting long minimum criteria entry trades on this chart. Coming up. Time's almost up. 1 second. Counting minimum criteria trades. Time's up. 5? What? I mean, come on. All right. Let's, because some of you typed in no's, you might not even know what I'm talking about, and that's cool. Okay, I'm going to explain it right now. Okay, so let's use this example where crude around 7:45 this morning decided to do a push-up, like what we call thrust, in the upward direction, creating what we call the beginning of an uptrend. Background turns green, bars are predominantly blue. You have a green stealth in place. You've taken out some swing levels from over here, and so now you're looking at long trades from support. Now here's the remnants of our long trade at the midband over here. So that was later on down around 8:30. Here we're back around 7:45, 8 o'clock. Now the definition on the long side of a minimum criteria trade is it has to do at least 2 things. First of all, it has to break the stealth line and close below it, which is the sneaky snake line right here. The green line is called stealth. Okay, it's got to break and close below it. And it has to break and close below line 6, which is the thin green line right here. Those 2 criteria in an uptrend constitute what we call minimum retracement criteria to get long. Now, given that description, I'm going to ask you some questions. Are you ready? Okay, we're looking at the first area here right around 8 o'clock. Does this bar right here meet the minimum criteria entry? Yes or no? Okay, I'm going to do them all quick. How about that one? I'm going to do a series of them real quick. You type a yes in when I hit on a bar that you think is good. How about that one? Remember our criteria, right? In fact, I'll do it with a new, let me do it with a new, let me leave those 2 there and do a new arrow. It's going to help everybody. Just take a brand new arrow in here. Okay, how about that one right there? How about that one? Does that meet the criteria? You remember the criteria. Close below stealth. Close below line 6, which is the thin green line. Let me just make it clear so everybody's clear. Line 6 is the thin green line right here. That's what that is. Okay? Okay, how about this one? How about these over here? How about these 2? What about that one right there? How about that one? So, in looking at this area right here, would you agree that this collection of bars right in here would meet the minimum criteria to take a long trade? in this area right here. Yes. They closed below stealth, and they closed below line 6, the thin green line, in that little box. Most of them did. Therefore, this one box here constitutes minimum criteria long entry trade 1. So that's 1. That's the first one right there. All right? Let's do the same exercise over here. Okay, here's our next thrust. Market coming up, market coming up, market coming up. How about this bar? Does this meet the minimum criteria? Yes or no? How about this bar? What do you think? Minimum criteria, long entry. Does this meet it? Yes or no? How about this bar right here? Yes. So is this box right here minimum criteria trade entry long? Yes or no? Right there, those two bars. Yes. Trade number 2. Obviously, these bars up here don't qualify. So the correct answer was what? 2. Good. How many you got 2? How many you got that right? A lot of you did. Okay, good. Good deal. Good deal. So here's the thing, and I would say in this order. Really, it really doesn't matter what your skill level is. You could be a beginner. You could be intermediate level trader. You could even be borderline expert trader. And my sincere advice to you would be this. Try to limit, and really this is very important, please, okay, try to take this to heart if you can. Limit the instruments you look at to trade to 1 or 2, max. Okay? Let's all pinky swear on that one. Try to find an instrument that you do well at. Could be anything. Doesn't matter what it is. To get very good at it. Start simple. Don't try to take on the world in a day, right? Pick, I don't know, 1 or 2 trade entry types. Mid-band, minimum criteria, deep retracement. Maybe it's just mid-band for now. And then this is the most important thing. And then master it. Remember, this third one here, and actually all of them combined together, the proper instrument is key. You got to find something and just get really good at it. I mean, you can see Gary, has been trading oil for years, every day, looking at that chart every day, all day long. 20,000 hours of studying that instrument. He's got a feel for it. I like oil too. I mean, in ES, I've traded that for years, thousands of hours of time on it. I can tell when it's chopping. I see it. I know what it's going to do. I know how to try to deal with it. Gold, not so much. And Russell, Russell's kind of hot and cold. When Russell's behaving herself and respecting swings, she's a good little trader. When she's spazzing all over the place, you got to recognize that and just let her do her thing until she calms down. Well, it's okay if you're learning. If you're, still learning these 3 things are really critical to your success. They really are. Don't look at too many instruments. You can't juggle 4 charts. You can't. I'm just going to say it. You can't. Because, you're going to be looking at a chart over here, and, somebody's calling, well, I'm going to get long here, and by the time you look at it, it's already moved. And then oh yeah, well I'm gonna short the Russell, and then you pull it. You look at the Russell chart. It's already moved. You're late. You get stopped out. If you're chasing markets around, you should really have 1 or 2 charts on your screens. 1 or 2 tops, no more than that. And then whatever those are, experiment with several different instruments. Okay, we have a lot of people that trade stuff that we don't trade in the room. They're calling out YM trades. They're taking NASDAQ trades. I've seen currency trades like 6E, dollar. There's other markets you can trade. And then master that instrument and then find the trade types you like. What I'm saying specifically is, yeah, of course, we teach this. This is minimum criteria long. But you might come back and say, you know what, Charles, I tell you what, I see that minimum criteria long. I understand what that is. Like visually, I see it, but I just can never get those trades right. I don't know what it is. I get in too early sometimes, I take it on a bar over here and I feel heat and I get nervous and I dump it, and then I miss it and I'm chasing it up here. I just hate those. I love the mid-band. When they come sit on the mid-band, I love those, and my win rate is super high. Well, then what should you do? Take mid-band trades. I mean, that should be obvious, right? You have to experiment around, and when you go with something you like and you're good, you run with it. All right, I went a little bit over here. That's okay. Let me hit the stop button on the recording here.